Hey guys, Gary Pegues here sharing on today's podcast. And I want to thank Sean for asking me to do so. Always an honor to be asked, and pleasure obviously to help you guys, new agents or older agents, in training and become more familiar with the business or products in general as we move forward and trying to get better. So I love the model that Sean has put in place that continually helps agents move forward in their business if they choose to take advantage of it. So if you're out there listening, and I urge you to take advantage of all the training that's offered, whether it's podcasts, training calls, videos, audios, etc. It's all out there for you to get better, but you do have to get up and get moving, and you gotta take it upon yourself to take advantage of the resources that are in front of you. So today, I want to talk a little bit about Mutual of Omaha's Term Life Express product. Really two features of the Term Life Express product, both the regular term and the one that is the term with return of premium. A lot of you guys are familiar with the product. You're using it in the homes, particularly as you're meeting with mortgage protection clients and the leads associated with those. And I will talk a little bit about how I sell it in the home and some of the benefits that the product has, so that you can create and build more value with your clients in the house, so that they become not only more comfortable with you, but more comfortable with the product that they're about to invest in. So the first thing with Mutual of Omaha, the obvious thing is the brand recognition that helps make it a little easier in the home when you're trying to discuss products with families or clients. It's obviously a very recognizable brand, both the logo and the name. Families are familiar with it. It's been around over 200 years. Some of their parents have had Mutual of Omaha in the past. So immediately coming out of the box, they initially look at you as a credible source, because they know that Mutual of Omaha is a credible insurance carrier. So that's the first thing. Many of you are using Mutual of Omaha's Term Life Express in mortgage protection appointments, obviously because it does offer the length of term, which is typically coincides with the length that the loan that they received on the house, whether it's a 30-year, 20-year, 15 or 10-year loan. We want to use these products when attempting to cover either all of the mortgage, most of the mortgage, or at least some of the mortgage in the event that the client dies or becomes disabled, so that they can protect their families. So it's very clear, and they understand that they do have a loan for 30 years, for example, and they want to protect the house payment for that length of time while they're paying for the house until it's paid off. So I'm going to talk a little bit today about both the straight term product, which comes with the living benefits, and I'm also going to talk briefly about the Term Life Express product with return of premium. And we'll start out with that one first, the Term Life Express with return of premium. And typically you're going to write this product with people that are under the age of 50. So they're young and they're healthy, and it makes a lot of good sense to them to get all their money back when in the event that they don't die while they're living in the house. So the Term Life Express with return of premium, obviously the Term Life Express in general can supply or provide the family with up to $300,000 of insurance in the event that the client dies while living in that home. So the return of premium part of that product is really important to understand, because as you're using your quoting tool on your phone to run quotes for the client, and you click the return of premium button, you're obviously going to see the quote. Let's say it's $100,000 for the client with return of premium, and you hit calculate, you're going to see the quote for $100,000 for that person at that age. But at the bottom, you're also going to see the cash back or return of premium check that family is going to get if the client does not die within that 30-year period. And right below that, you're also going to see a paid up life insurance policy that the client also has an option of gaining at the end of that 30-year term. So when the 30-year runs out and the client is still here, then they have an option of either getting a tax-free lump sum check from Mutual of Omaha for 100% return of every dime that they paid during that 30-year period. So in a lot of cases, that's a pretty big check. Could be, $20, $30, $40,000, and it says it right there on the quoting tool. All right, or they can take the paid up life insurance policy that they never have to pay on again as an option. So it's not something they have to decide right there in the home when they're with you, but they can understand that, hey, in 30 years, depending on your situation, you may opt to take the cash in a lump sum check, or you may opt to say, you know what, I don't need the cash, but I would like to have that paid up life insurance policy that I never have to worry about again. So that's a really cool feature when it comes to the term life product with return of premium. It's really neat to do, and I illustrate that on the client worksheet when I'm writing them return of premium, is I will show them the cashback check, and I will show them the amount of the paid up life insurance policy that they would have access to as well. So it's really important. That's a really cool feature for the Term Life Express with return of premium. The Term Life Express without return of premium, obviously if they are over the age of 50, they do not qualify for the return of premium. So once they're 51 and on, they do qualify for the term product, obviously, but not the cash back. So, but there are a lot of really cool features that include the living benefits that come with the term life product. So I want to talk a little bit about those living benefits because as you're in the house, as you've heard on other training calls, if you can build value in that product other than the facts that they already know, and what I mean by that is if they're getting a $100,000 policy, what they do know is when he dies, she's going to get $100,000 inside of that 30-year period. So she's clear on that. But when you start to add value to the product in talking about these living benefits, that's when you really see the client's eyes pop because they didn't realize that it covered as much as it does. So the three living benefits that are very important to know are, of course, the terminal illness rider, the critical illness rider, and the chronic illness rider that are inclusive of this product. Okay, and the terminal illness rider, obviously I explain it to them as, in the event that he were to become terminally ill and find out that he's dying in the next 24 months of something, could be cancer, could be, but if he is deemed terminal, then they can pull as much as 92 to 94% of that face amount out to help their family. They don't have to wait until the client passes for them to gain that benefit. Okay, so that's called an accelerated death benefit rider, which means they would accelerate the face amount to the family in that event. The other thing is the critical illness rider, and which does the same thing. But if the client were to become critically ill during the policy, while the policy was in effect, and those would include things like ALS, kidney failure, any major organ failure, heart attack, stroke, things like that, anything that's considered critical, then they would again have access to the face amount of that product and be able to pull money out in the event that the client becomes critically ill. The chronic illness rider works the exact same way. So if they were to become chronically ill, which simply means that they were unable to perform some activities of daily living, which would include things like bathe yourself, feed yourself, clothe yourself. So if he becomes chronically ill, again, family would have access to the cash, to the face amount, to be able to help them through those times. So those things are interesting, but they're also very valuable to the client because they know people who have been in those situations. They've either been terminal or critical or chronic. And this feature allows the family to benefit and not suffer in the event that the husband or the breadwinner becomes ill or terminal. It'll actually save the family financially if the breadwinner is unable to work and those type of things. So those three things: terminal, critical, and chronic illness, very important to be able to share with the client, building value. I love using the brochure that Mutual of Omaha will send you for free. It lays it all out. It explains each one of those riders in clear black and white. You can take a highlighter while you're right there at the table and just highlight those riders. Just highlight terminal illness, critical, chronic. The fact that the death benefit never changes, real important for them to know. They've heard so many times that, well, my dad had an insurance policy that was $100,000, and when he died, it was only worth $20,000. So they've heard those stories, and it's important for them to know that this does not decrease just because the years are passing by. Okay, there are some additional riders that you can add on to this product, to either one of those products, like the damage waiver of premium rider, which says that if their house were to sustain any kind of damage up to $25,000 or more, that they will suspend their premiums for up to 6 months. So they won't have to pay their premiums if their house sustains that type of damage. The other thing is if the client were to become unemployed, they can add the unemployment rider, which helps the client and the family not have to pay the premiums for up to 6 months in the event that they were to become unemployed. That's really, really a neat feature as well. Everybody knows somebody who has gone through that, and they don't lose their policy, and it protects their family. That's always a fear when people become unemployed. So the common carrier death benefit provision is in there as well. Basically provides an additional benefit of 100% of the face amount. So if the client were to die in the common carrier, like an airplane or a train or bus or any being a fare paying passenger, then if they had a $100,000 policy, then of course it would pay out $100,000 in the event that were to happen that way. So those are all really good features for the Term Life Express, both return of premium and just the regular term. I would advise you, if you haven't already and you're selling the product, you can call Mutual of Omaha. They have a supplies division where they will send you free of charge a box of the Term Life Express brochures. It's really colorful. It's nice to leave with the family. It's got all the information, all the riders explained in clear black and white. It's also good for you to go over so that you become more familiar with those, so that you can speak clearly in the house about what those features are. So if you haven't already done that, please do that. Give them a call, get those things in your hands so that you can become a better agent, a more qualified agent in the home. I think you'll feel more comfortable explaining it. You'll believe in it, and that makes it it'll come across in your face and in your voice as you're sitting with the clients. So I hope that all helps. Again, if you have any questions, you guys certainly can reach out to me. Be happy to share anything that I know. Again, it's an honor to be on the call. I hope this helps you guys moving forward, and I appreciate you guys asking me to be on the call. I hope everybody has a wonderful week. Goodbye.